Motor third-party insurance is a key concern to very many Ugandan motorists as it is critical in vehicle crashes. Sunday Protasio, the Director of Strategy and Market Development at the Insurance Regulatory Authority of Uganda, explains who the three parties in the case are.
One is the insurer, who is issuing the insurance cover. We can call that one first party. Two is the person who is buying the insurance. We can call that the second party, the owner of the vehicle, or if it's not your vehicle, you are the driver, but you have an obligation to buy third party for the vehicle that you are driving in the names of the owner. And the third is that other party who has not signed anywhere on the contract, but is a beneficiary by the virtue of the policy itself. For starters, read that the box body lost control, so he's liable for the accidents. He's the first party. The insurer of the box body is the second party. And all these people who were involved, and some died, others were badly injured, are what we are calling the third parties. If, for instance, you are driving your private car, but you have your wife inside the car, your wife does not pass to be a third party.
In Uganda, it is mandatory that any vehicle, van or motorcycle for private or commercial use should use motor third-party insurance cover.
If your car is going to be within your compound, you may not need third party. But provided it's going to access a public road, then the law mandates you to have motor third-party insurance.
Buying third-party insurance depends on the type of vehicle, its use and seating capacity. The amount paid for a motorcycle, inclusive of the premium and applicable stamp duties, ranges from between 50,000 shillings and 60,000 shillings annually. A saloon car goes for 72,000 shillings. A taxi pays between 120,000 and 130,000 shillings annually, while a bus pays between 170,000 and 200,000 shillings a year. In the event of an accident, the current law provides for compensation for bodily injury or death up to the defined limits.
Unfortunately, currently the limits are still low. For any accident, the maximum that an individual can get from the insurer in terms of compensation is currently 1 million shillings. But in aggregate, if all the 14 people die, then the insurer's liability is up to 10 million currently. But we are reviewing the law to ensure that these limits are revised in line with the current economic times.
Protasio explains what happens if the accident involves more than 10 people, as happened in the Nambole crash recently.
The limit is 10 million. So the compensation will be on first come, first serve. Those ones who report first, up to the point the insurer has exhausted the liability of 10 million, then now whatever remains, the owner of the box body has to pay from their pockets.
The mandatory third-party insurance cover has limitations.
The coverage is limited. I've talked of 1 million shillings per person and 10 million shillings in aggregate. But if we take the example of Nambole, you have maybe 100 people involved, injured. Now, 10 million shillings for 100 people is nothing. Really, it does not make sense. That's the limitation. The second limitation is that it does not cover property damage. Now, the vehicles were destroyed, and if the box body driver is found out to have been negligent or to be responsible, then he has to repair all those vehicles. But three, and most importantly, your drivers, the workers of the driver, the conductor, are not covered by this.
Protasio recommends a comprehensive vehicle insurance policy cover.
Covers almost all risks. That's why we call it comprehensive, except those risks which have been specifically excluded. In the example we are using, the box body is covered, so the owner doesn't have to worry. It has an extension for third-party property damage. The vehicles which were damaged will be covered up to the limits defined in the policy. Now, unlike third party where the limits are defined, for comprehensive, an insurer could opt to give you higher limits for a higher pay. But the minimum is 50 million.
For the comprehensive insurance cover, the premium paid is dependent on the value of the vehicle. Motor private insurance is charged at 4% of the value of the vehicle. Non-stretched commercial vehicles like Ubers are charged a rate of 5%. A 14-seater passenger service vehicle is charged 6% of the value, and a bus 7% of the value of the vehicle. Surprisingly, border borders are charged a higher percentage of their value.
A little higher, and I think it stretches up to 9%. Now, why is a motorcycle? Because of the risk exposure. Not actually the value at risk, but the risk exposure itself.
Protasa explains what happens when many vehicles are involved in a crash and each vehicle is insured by a different insurance firm to avoid double compensation.
We call that subrogation. Once I have been paid, to avoid double payment, I surrender what we call subrogation rates. I surrender my rates to recover to the insurer, and the insurer is going to pursue what they have actually paid to me in my name from the cause of the accident.
Whereas all legitimate claims have to be paid, some claims are not payable. The reasons include expired policies, forged stickers got from illegitimate sources, invalid driving licenses, driving under the influence of alcohol, and an accident out of negligence.
The laws of Uganda are very clear. You don't drive, you don't drink and drive. Now, if they discover that actually the accident happened under the influence of alcohol, and who does this? It is usually police. They issue a report. Before an insurer pays a claim, there is an accident report, a police report. So it is examined, and when they say you are driving under the influence of alcohol, the insurer will have washed their hands clean.